Okay, so what some people don't know is that there are commissions that are being paid related to some of these funds. And a lot of them are what they call back-end loaded, so you don't even necessarily see it coming out of your account.
Yes, it's sometimes tough
Yeah.
to sell
Yeah.
a commissionable investment to an investor who recognizes that if they put up $10,000, only 9,900 of it gets invested. 9,500 of it gets invested because there's a 5% commission. So many of the mutual fund companies begin to put a back-end commission, back-end load to their contract, so that the investor had all $10,000 invested, but if you wanted to pull it out the next day, it was only worth 9,500. Next year it was worth 9,600, and then 9,700, so that the mutual fund company was reimbursed that commission that was 5% commission that was paid to the broker up front over a 5-year time frame. So that back end load went from 5% to 4% to 3% to 2% and then disappeared.
Right.
There's also right now what's called a 12B1 fee, which is an annual cost over and above the normal fees that mutual funds charge. And that 12B1, most mutual fund families have a 12B1, and that's right at the moment it's being paid to the brokerage house, the Merrill Lynch, Dean Witter, the mother company. Not always does the broker see that 12B1 or get paid all of that 12B1 amount.
Okay. All right, let's move on a little bit beyond this brokerage issue, and that is why would using an advisor be a better idea than doing it yourself?
Because the financial industry is awesomely complex, just awesomely complex. So everybody at our firm has a master's degree. I've had master's level work in estate tax planning, income tax planning. You do the preparation. You and I together do the planning for our mutual clients. And building investments in cash flow management. At a master's degree level, there is an immense amount that I don't know. And so for any individual to think that they could go out and make decisions on their own would be an unrealistic expectation for the person who is not immersed in the industry and educated and trained in the industry like we are. So what we see, the people who walk in our door to hire us first time explain their history, so we get to hear what's happened in their past with their investment choices. And the reason they're in front of us is because they've tried and can't do it. They've tried to do it on their own and have just made gross errors. Just really sad. So, you know, an interesting story, Mike. I'm going to get a bit complex in this description, but it points out why our clients give us a call every time they want to make a financial decision. So my client's sister lived in the East Coast, and their uncle lived in the adjoining state. He was terminally ill, and the sister of my client went in there and helped change title on the accounts from separate property in the uncle's name to joint tenants with rights of survivorship with the spouse. The spouse was a Spanish citizen, not an American citizen. And the uncle died, leaving a will that said almost $3 million went to my client and his sister.
They put it in joint tenancy.
And a special trust had been set up for the surviving spouse. But because the titles had been changed, none of that $3 million is going to my client and his sister now. They were trying to be nice to uncle and aunt, do something. They just knew a little bit of information about estate planning and titling, and they made a gross error, just gross error.
Mm-hmm.
What a sad event to miss out on that.
Yeah. Why don't you talk a little bit about the role of a financial planner? So, we're going, as we've said, through these turbulent times. So maybe as a very brief situation for helping clients through these difficult times, what do you think the role of financial planner is?
Financial planners, what we say in our industry is that we need to be able to manage our clients' expectations before we can manage their money. And what that means is that when people make investments, there's a lot of emotion tied around that investment. And in many cases, people are making investment decisions based on those emotions. So it's normal for us as human beings to have emotions. It's what we say is it's just not good investment choice to make investment decisions using those emotions. Mm-hmm. In other words, markets go up and we think markets will continue to go up. Markets go down and people get fearful that it'll continue to go down. And as markets go down, people get increasingly fearful until they finally panic and sell out. Mm-hmm. And I've never found a case where selling out at the bottom and buying at the top produces good investment results.
Right.
That was a gross exaggeration. But the point is that we're here to help clients build an investment policy statement, a plan that fits their goals, their needs, and then make sure that we coordinate all of their estate tax planning with their income tax planning, with their investments in cash flow, so that they can have high expectations of achieving those goals.
So I'm going to just sort of summarize that, in a sense, the personal financial planner, asset manager functions as a personal coach to sort of, again, hold the hand of the client
Absolutely.
Through these difficult times to help them to keep on course and avoid making some major blunders. Like one of our favorite authors likes to say, keep them from falling on their grenade. So anyway, just wanted to bring that. You know, sometimes it helps to have that trusted counselor, that person to sort of be there with you when you're going through this really difficult
What
time.
we say is that we are your personal. Our team of professional financial planners at our company called the Family Wealth Consulting Group. That team is our client's personal chief financial officer. Mm-hmm. So the client is the CEO, mm-hmm. but like every major corporation, the corporation's job is to make money, and they hire a CFO to help them manage the money. The CFO's job to report to the CEO so that they can make an informed, educated decision about the tax and economic consequences of their choices.
Mm-hmm. Okay. Everybody seems to tell the same story. I mean, we hear this, we see it in the Wall Street Journal, diversify, hold your investments long term.
Yep.
So what is the difference, again, for what you do as opposed to, what these other guys are saying?
We are able to bring a consistency to the client's portfolio and planning that a sales broker would not be able to do. Earlier I said that every time the salesperson meets with you, they need to justify their time by selling you a product. And we are paid to bring the client educated, informed, experienced, wisdom, in helping them make an educated decision about the tax and economic consequences of their choices. So we don't sell a product. We are there to bring advice and counsel to the client. Mm-hmm. It turns out that those people who trade the most statistically make the least returns. Those people who don't trade at all buy and hold, over a lifetime make the highest returns. So our goal is to help you understand what's going on in the marketplace, what's going on in the economy, what's going on with your taxes, your estate planning, your personal portfolio, so that you can make an informed decision. You need to hear that people who do our clients need to hear. I know you know, Mike, because I've told you. Our clients need to hear that the more you trade, the less return you can expect to get in your portfolio.
All right. What about all this stuff in the newspaper? You know, gee, I see all this terrible news. You know, shouldn't I be doing something about it? Maybe you can comment about that in a few minutes.
Yeah, Wall Street's job is to get you to do something. They don't care what, just do something.
So the way that they make money is when you
trade.
You buy or sell.
Buy or sell. If you just do something, and they are expert at hooking into our emotions as humans. Those emotions are fear and greed. I say panic and greed. Mm-hmm. So if the market's going down, they come in with a report, some research report that says markets are going to continue to go down, sell out now, do something different. And so they present that information so that you, in a way that they think will cause you to make a decision to do something. They really don't care what, just do something.
I think the other piece of it is, it's kind of a boring headline to say, disregard whatever's going on out there, just sit tight. You know,
yeah.
It's sort of like, you know, it's what to do now, and whereas we're saying, you know, what not to do now. So anyway, I think that's fascinating. Very briefly, because we only have about a minute and a half, how can I apply your investment philosophy to my 401k account?
So that's a good question. Many of my clients have 401k accounts, and they bring to us the list of investments that they have available, that the employer has made available to the participants in the plan. The first thing that I look for in that list of mutual funds that are available is the index funds. And if there's 2 or more index funds, I think that's spectacular. It's not uncommon to find 0 index funds in there. The goal is to buy as much of the stock market as possible at the lowest cost that's possible when I make recommendations as to how to allocate monies in a 401k plan.
Okay, Craig. We're basically out of time, so I want to thank you
great.
again for being my
Mike,
guest.
Thank you. I'm
it's
real
such a pleasure
glad
having
to
you
be
here with me. And folks, I hope that we've given you something to think about. I hope that you can appreciate a little bit more about what people like Craig do. And we've also given you a hint about what to do related to your 401k account. I can tell you my 401k account is invested in dimensional funds. So, so anyway, again, we wish you well with your investments, and we hope we'll see you next time on Financial Insider Weekly.